a little higher because of this. There's more bouncing going around, but I've noticed that the stock market is starting to get used to it. So when he announced the 50% on Europe, it fell 1%. Stock market fell 1%. It's sort of like we see the game and we're starting to know how you're going to play this. So I'm expecting by August, all these negotiations will be done. And then the stock market, since it knows what's coming at it, it can value itself and move forward. That's how I'm seeing it from my position.
And I guess also all the very conservative. They're not, I guess, they're not, those are strong. Everything's it may be good, but
Right.
This happens. We just very conservative now, but we don't know what it's going to do.
Right. I think what you're saying is there's more cash on the sideline waiting to see what happens. And I think that's a reasonable assumption. Yep. A complete. Yeah. Okay. Yeah. It's investors are a little nervous, and they're not investing as aggressively as they were when they knew what the future holds. So with President Biden, and you had gridlock, 50% Democrat, 50% Republican, and the market likes gridlock because it knows what to expect. But when you have one person in charge calling the shots week in and week out, it doesn't know how to value. Yes, it does.
Discounts individuals that Amazon just seem like every sector nobody's escaping.
That's true. I mean, even the healthcare, some of the drugs are being attacked. Yes.
So with that being said, thing that we need at present is
well, and we tell our clients this at Capital City, the risk management, and what you're talking about is risk, is built into the construction of your portfolio. And you have bonds in there. That's the risk management tool, because when stocks go down, bonds go up. And the board has accepted the portfolio construction and has accepted inherently the risk management that's in there. That's how we look at it. It's already built in.
I just want to make sure that if anything is out there that you do
I'll defer to Burgess because they're designing the portfolio. Yep. Okay. I'm done. That's
all right. Thanks, sir.
Yep. Thank you.
Mike. So I have two handouts for you, market overview as well as the quarterly report. So we'll start with the market overview. Obviously, a lot has changed since the end of the quarter, so I want to give you some context and updates through the end of last week, what markets look like. And then the report will just be a snapshot of as of 3/31 quarter end. So in the handout, page 2 looks like this. So for the first quarter of the year, we actually saw a contraction in the economy, GDP shrinking down 0.3%. The first time we've seen that since early 2022. And predominantly it was tariff-driven spike in imports. So with the anticipation of tariffs going into place, a lot of companies really were front running the tariffs by importing a significant amount of inventory to build up at reduced prices. So you can see the chart here, that purple line down. Again, that's net export. So nearly 5% more imports versus exports for the quarter. We saw the same thing again, first quarter of 2022. That was when inflation was spiking. Inflation spiked June of 22 at over 9%. So again, that was the same thing, importing as much as possible to get ahead of potential price increases from inflation. So if we go to the next page, despite all the uncertainty around trade policy and tariffs, we continue to have a strong labor market, a very resilient labor market. And so the April unemployment numbers came in at 4.2, a continuation from March. We actually added 177 jobs in the payroll report for April. We did see a revision down for both March and February, but on average across the 3 months, it was still 155. So it's still very strong growth for the 3-month period. And again, just very resilient labor market, despite the uncertainty around trade policy. Page 4, one of the things we are concerned about is the consumer. And specifically, I'm looking at the bottom right-hand chart, and I actually have an update as of this morning of that chart. But you'll see these are delinquencies, so percentage of balance